My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey, gang. Chances are you've heard of investing in multifamily properties. Chances are you've heard of investing in assisted living facilities, but you might not have heard about adding in a mental health aspect for your tenants and for your residents. Well, that's what today's guest, Arthur Lyons, does. And Arthur has a very, very interesting background. He comes from being an administrator in a nursing home years ago. Then he got into real estate, did a whole bunch of different things, all the way from wholesaling and flips, and then getting into other kinds of buy and hold strategies. And most recently, he's involved in investing in multifamily as well as assisted living facilities with that unique twist. So Arthur, welcome to the show. Great to have you.
Thank you. I'm very excited to be here.
So Arthur, give us a little snapshot of what your portfolio currently consists of. What kind of properties do you have? What areas do you like to invest in? Just give us kind of the big broad strokes.
Sure. So the broad strokes, as you mentioned, I've kind of done a little bit of everything on my way up. So currently my portfolio consists of single families, small multifamilies, small apartment buildings. And now with Invictus Elite, we acquire assisted living facilities and multifamily. Assisted livings anywhere up to 120 beds, as what they're referred to, and multifamily 80 to 150 doors. So we are a new fund. So currently we're closing an 80-unit multifamily apartment complex in Atlanta, Georgia, and a 51-bed assisted living facility in Pennsylvania.
Congratulations. So one of the things that's stuck out for me with the information you sent me ahead of time was that you put a lot of emphasis on mental health and mental wellness, not just for assisted living folks, which kind of makes sense with, dementia stuff and what goes on there, but also for tenants in your multifamily properties. So tell me a little bit about that. I'm curious about that, Arthur.
Yeah, myself and my partners, Nicole Purvey and Noel Parnell, we just believe that now more than ever, and I think we all would agree, just looking at the news over the past couple of years, we all have some level of mental health strain, I would say.
Some of us more than others.
Yeah, some level of mental health strain. And I don't believe that apartments any longer, you should just look at the tenants as another line item that makes you money. You have to have some level of care and compassion for their well-being. And apartments, I believe the future is looking at tenants more like residents, which more aligns with my background in running, thousands of nursing facility beds. It's not only a roof over their head, it's community. It could be anything from lighting to quality air to outdoor spaces to gyms. It could be as little as a newsletter that connects them with mental health resources in the community. It could be having a yoga instructor coming into the common area, once a month. It could be a therapist coming in where they can have conversations. And we find that focusing on that not only helps the residents of the building, but it does translate to the bottom line because people not only work where they feel enjoyable. We've heard that people don't necessarily quit the organization, they quit their boss or they quit their environment. It's the same thing with residents in a apartment complex. Sometimes it's not sometimes it's the landlord they're quitting. It's not the physical location. It's how
their neighbors they're quitting, or yeah.
It's the community. So there's some apps that we partner with that help develop that sense of community. If you need somebody to walk your dog, or if you have a bike to sell, people can communicate with each other through the app. But also,
because like an app that connects people specifically in one building. Is that what I'm understanding?
Yes.
So kind of like a mini Facebook just for that building.
Exactly.
Cool. I never heard of that.
Yeah.
All right.
So that combined with the mental health aspect, not only that, our buildings are certified, and there's certifications you can get nowadays. If you look up WELL certification, there's certain perks that you can get as an operator for being WELL certified through Fannie Mae. You can get discounted points on your interest. You can get better terms if you can show that your facility is WELL certified. And there's a list of 1,000 different things that you can become. You have to check off a certain percentage of them to become WELL certified. And so that's our target niche area that not a lot of people know about.
No, I never heard of that before. So that all sounds good. What's your favorite kind of success story or anecdote or example of this actually working well for one of your tenants or residents?
Sure. So this is not very popular across the country or the world yet, but there are certain pockets that are good case studies. We're in the beginning stages of implementing this for ours to use it as a strong case study. But there are some places in Los Angeles, California, who seems to be a early adopter. Certain places in Texas where the occupancy or the tenant turnover has dramatically decreased. As an operator or landlord, that simultaneously correlates to increased, bottom line with having less turnover, less occupancy. And then we believe in having satisfaction surveys, just like a lot of other companies have already taken this on, but in multifamily, how many of us really have, satisfaction surveys from their tenant base?
Very few. Very few.
Very, very few. Because most people aren't looked at as residents and as part of a community. They're looked at as a tenant that's writing a check. And we don't think that that's the way to go.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Interesting. So early days in this, what are some of the funnest things that you've implemented already, Arthur?
This might sound silly, but a gazebo, a gazebo where you can have yoga classes, therapy pets that come in. Interact.
People can just go down and pet the animals.
Yeah. All these sort of things. Having events surrounding the holidays, 4th of July barbecues, actually sending the tenant something nice at Christmas. These are all things that create connectivity, and selfishly does add to the bottom line again. But however, it's mirroring those two things that are crucially important.
Yeah, very, very cool. That is great. So Arthur, we were talking a little bit offline that you're doing something pretty interesting with your investors as well, because you guys, like you mentioned, you've started a fund, and you're starting to bring people on board with that. But you do a little bit above and beyond what most syndicators or fund managers do for transparency with your investors. Tell me a little bit about that so we can share those ideas.
Yeah, I think it also comes from me caring for residents. I've worked in elder care since I was 16 years old.
Okay.
And a lot of what I learned and implemented there is kind of seeping into the multifamily. And so a lot of the things that is important is education. So in the assisted living space, skilled nursing facilities, families they have to tackle this major change in their life, and they don't know what to really expect. So a lot of education has to happen to make them comfortable. Same thing with investors in multifamily. People know that real estate is one of the greatest wealth building strategies that we have. People know that they should maybe invest in apartments, but they have no clue. Mm-hmm. They have no clue. They could be in totally different industries, automotives, healthcare, whatever it may be.
Right.
So instead of just talking to people and asking them for money or telling them that this is a great investment for them, which it is, giving them a little bit more education as to why. Okay. So we have a newsletter. It's called The Profit Door that we publish, and it gives educational anecdotes and tells what our journey looks like. Why are deals good deals? Why do we choose specific market areas? Some of the basics as to cap rates or some of these terms, NOI, things of that nature, to make them more comfortable and more savvy and more educated investors. So every week we have a underwriting call that people can join in on and actually look at us going through some of the deals, real live deals that we're looking at, whether assisted living or multifamily, get a peek behind the veil, see how we're going through our spreadsheets, see the deals we say no to. And why do we say no? And the ones we say yes to. And then once we finally find that diamond in the rough, the needle in the haystack, which it really is, because we look at hundreds of deals to find one that actually will serve us well. People can follow us along that. A lot of funds consider themselves blind funds. That means you give your money and you really have no clue what asset you're investing in. You're investing in the team, right? You see a pitch deck, but you don't really understand the fundamentals. And some people want to know. So we open the doors, we open the behind the scenes for people to be able to educate themselves. And whether you invest with us or not, you at least have that knowledge to make, prudent decisions.
Very, very cool. What do you find is your participation rate with these kind of, open Zoom calls where people are kind of watching you guys over the shoulder?
It's growing. It's growing. Every week we have around 12, 15 people so far. We're kind of just getting started. You're at the ground level, which is an exciting place to be.
Yes.
I think sometimes partnering up with or getting involved with someone at the ground level is the best place. It's been the best place for me because as that person grows, they remember the people that are on the bottom level.
Yep.
Some people get to a point where you can't get them on the phone anymore. You can't get on a Zoom with them anymore. You can't, get those firsthand questions answered. And so we're at that exciting stage at the ground level where people can join us and develop that relationship now.
So you're at the ground level. What are the plans? What are the aspirations? What are the goals for the next 12 months, Arthur?
Sure. So our fund, Invictus Elite, is a $15 million fund. Our goal is to acquire 4 to 5 assets within that parameter that I mentioned previously. So we're still on the hunt.
So between multifamily and assisted living facilities.
Yes, combined. And that's very strategic that we did it in that way. It's a great way to balance the portfolio, balance the returns. The assisted living play is profitable, yes, but it's more so mission-based for myself and my partners. Even myself specifically, the last 20 years, that's been my purpose, and I got into it at 16. I had no clue that it was profitable. I got into it because I wanted to make sure that other people didn't go through what my Aunt Lorraine had went through when I was a kid, when she was staying in one of the facilities. And so the two assets balance each other. And we think the mental health and wellness, while many don't see the correlation, they're very much connected.
No, it makes a lot of sense. Well, that's fantastic, Arthur. And I wish you the best of luck. That's a very noble path that you're on. So all the best to you with that. If people would like to connect with you, what's the best way for them to do that?
The best way would be on LinkedIn. My LinkedIn profile, my name's Arthur Lyons. I shared the link with you, and people can go there, can message me directly, can follow what we have going on.
Yeah, you're probably the only Arthur Lyons with a Y in Philadelphia, right?
I think so. Yeah. Yes. Arthur Roosevelt Lyons III is my full name.
Okay, yeah, you're the only one of those. That's for sure. Yeah. Awesome, Arthur. Well, hey, thanks so much for being on the show. This has been great.
Thank you.
All right, everybody. See you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.